going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Welcome back to Fast Money. We've got a Bitcoin alert, the cryptocurrency crashing again right now as China calls for tighter regulation around mining and trading. The headline taking down the rest of the crypto complex. Bitcoin is now down more than 20% since Monday. We also get the Biden administration in one of its proposals saying that if Bitcoin is used in a transaction that's greater than $10,000 worth, then it has to be reported to the IRS, which would make it difficult for Bitcoin to be used for larger transactions. James.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And now we see the narrative changing on Bitcoin and cryptos. We had the Fed come out and say they're going to be working on that CBDC. But also we have CNBC playing with the Hegelian dialectic. Now it's a Ponzi scheme. Now it's a con. But what they leave out is that the Fed has pumped these prices in cryptos and in stocks. When the masses are looking at CNBC, they're not going to invest. They heard CNBC talk all great about Bitcoin at the beginning of the year and crypto. Now it's a con and a Ponzi scheme. Now we know for a fact that CNBC knows the utility behind the cryptos. And I'm going to show you a video of that. So when they have guests speaking about the utility, that's a perfect time to educate the masses. But no, their job is to set that fear in, to set that second guessing in. But that's the reason why I educate you on the fourth industrial revolution. It's so important for you to educate your friends and family about finances. Yes, it's boring, but where this world is headed, and we can look at the C word, we can look at all the technology moving behind it, you definitely better be educated or you're going to fall for the devil's tricks. Now, cryptos have dropped 40, 50, 60%. Guys, who do you think is going to buy this dip? That's why I let you know we're going right back up. The Fed is going to take advantage of this dip, and they're going to ride it right back up. They make money whether it goes down or whether it goes up, and you should too. Now, is Bitcoin's days over? No, it is not. Why? Because we know about Bitcoin Lightning working behind the curtain. That second layer is everything that Bitcoin needs to be. And we know the central bank stopped Bitcoin from scaling to do Bitcoin Lightning. Only thing I have to do is read the white paper. Because remember, when it comes to the New World Order, it's all planned out. You have a wonderful day.
Let's bring in Maciej Czajkowski. You may know him as Pinboard on the internet. Maciej, good morning. Lay out your bear case for cryptos for our audience.
My bear case is that it's a giant pyramid scheme, and people are getting sucked into it. Unfortunately, it's a pyramid scheme that has a core of true believers and a core of people who are really fascinated by a technology. So it becomes difficult. It also has a group of very smart investors and all kinds of people who are heavily pouring money into it. So it becomes difficult to call it out, but I think it is very necessary to call it out because in the end, like every pyramid scheme, people are going to get hurt.
It may be necessary to call out certain aspects of it, but calling it a pyramid scheme It's too simplistic, no, to even call the technology behind it. 25 years ago, critics said that the internet would amount to nothing. Some of the narrative at the time, it's decentralized, so you can't trust it. There will never be any internet payments, too many technical problems. It sounds a lot of what I'm hearing from you and others around the bear case for cryptos at this point in time. Is it possible that we're just in the very, very early innings, and this is a platform, not a pyramid scheme or even a store of value? It's more than that.
That's an excellent point. And we have a history in tech of calling things stupid or pointless that end up being transformative. But it's really important to remember that these are not the early days of crypto. We've had Bitcoin for 13 years now. And when you look at it by its own criteria, all the things that it promised to do,
not in
and
the
it was
same
supposed
form,
to do,
Maciej.
well,
You could argue that this phase is very different. You've got
13 years ago.
institutional interests, more companies. I'm sorry, go ahead.
But what you have is a gambling token. You don't have a currency. I can't buy a pizza with Bitcoin. I can't buy a car with Bitcoin. All I can do is put money into it and then watch it go up 20% and down 30% in the same day. You know, coming onto these calls, I had to take a look to make sure I was talking about whether, you know, crypto is doubling today or halving. And that, on every time scale, you see that volatility. And you see a symptom of what is a giant asset bubble. Basically, money has nowhere left to go. We've had this pandemic year where the stock market's almost doubled, where cryptocurrencies have gone up by a factor of 6, or I don't even know what Doge has gone up by. And it's froth. It's money desperately looking for somewhere where you can still get a big return, coupled with this, again, hardcore of true believers who have a very strong and compelling technical and ideological case for why this is the wave of the future. But it's not.
Maciej, is part of the issue here that we don't know what's going to happen to different cryptocurrencies when we get a real protracted downturn? I mean, I could see an argument if there's a big difference between Bitcoin, Ethereum, Dogecoin. You're lumping them all in as one giant, I guess what Elon Musk would call hustle, but maybe they're not. And I guess it'll take some more stress to test that, right?
I would like to see at least one cryptocurrency that is able to just let me buy and sell things without paying. For example, for Bitcoin now, it's what, a $15 transaction fee. It burns as much electricity as the country of Argentina. It has a maximum capacity of 4 transactions a second compared to Visa, which is something like 1,800. All of these things, if it could just technically work for any practical use, I would have a much easier time saying that maybe one of these really will kind of pull forward and convince me that I'm wrong and convince all the other skeptics that are wrong. But right now, what we're seeing is not that. What we're seeing is that it is a gambling token that many people believe can only go up for a variety of arguments, and has no connection to any sort of real-world application except for the one thing that it has really revolutionized, which is crime. Bitcoin has made it possible to have a whole industry around ransomware. We just saw that with the Capital pipeline, and it's made money laundering much easier. So those are the actual 2 genuine areas where cryptocurrency has had a transformative effect. I think it would be nice to have a positive, not just the net negatives, before we all move off of the dollar or gold coins or whatever we're hoarding right now.
I think that's an interesting point, and it makes me wonder about whether yesterday's action, where you had a 40% swing in 24 hours on the most broadly accepted name, I wonder, do you think that was a death knell for another large vendor coming out and saying we will accept Bitcoin for our goods or service or our car or pizza or anything else?
I think you're not going to see many vendors coming out to actually accept the money, except maybe on the terms that Tesla offered, that if we need to refund it, we're going to do it in dollars or whatever the real currency is. But what I think you'll see is a lot more institutional investors dipping a toe into it because they don't want to miss out on the wild ride. So these constant dips and highs, they've been with us since the start of the cryptocurrency. It's just that more people are paying attention because the valuations are so high. But the root problem is not in crypto itself. It's the fact that, capitalism is constipated. There's nowhere for all of this flow to go. We have a massive amount of invested money and no real productive use to put it to. So it's just desperately chasing around. This bubble isn't just in cryptocurrency. You see this in, stamp collecting, coin collecting, NFTs, even GameStop stock now is kind of become dissociated from the actual ticker or the company that has physical stores.
Is the way to think about this, especially if you are a retail investor or somebody who's new to trading in general, and this has caught your eye, you've gotten involved, the way to think about this, that at least with Bitcoin specifically, volatility is inherent to the product?
Yes, absolutely. So cryptocurrencies, one of the beauties of them is that it's very volatile. But as a result of that, there's lots of upside. Lots of retail investors and traders are joining the space because of the huge gains, whether in Bitcoin, whether in Ethereum, whether in Dogecoin or meme coins. But at the end of the day, they should zoom out and have a big picture view. Because right now, Bitcoin and cryptocurrencies are building the future of finance, the future of open money. And if they have that big picture, then they should hodl and think long term.
So when you talk about that, and we were having this conversation about DeFi in general earlier on in the show, I mean, I've heard a lot of the arguments, especially with companies that are holding Bitcoin, for example, on their balance sheets, that they see this as digital gold. It's a hedge against inflation. It's a hedge against loose monetary policy that is over the long term devaluing the dollar. Is that not the key argument for these cryptocurrencies? Is it DeFi and blockchain and the applications to financials more broadly?
Yes, I mean, so DeFi is a huge market. Decentralized finance is, in my opinion, building the new internet. It's building open finance. What does that mean? If we go back and look at the dot-com era, we had big companies like Google, Yahoo, Amazon, eBay. This was the first generation, the first wave of the internet. Then we had Web 2. This was basically social media, connecting people on the internet. We had YouTube, Twitter, Facebook, and now we have Web 3, taking those online communities and giving them entire ecosystem and currency to transact and be able to exchange value between two people with trust. So we view cryptocurrencies and this entire space as not just open finance, but as the next evolution of the internet. And when you have that big picture, then you can see the value of crypto assets.
So then what becomes most attractive for somebody who maybe is willing to hodl, as you put it, and is willing to live with the volatility in this asset class right now? Is it Bitcoin? Is it Ether and Ethereum? Or is it something like the meme coins, which, I mean, SafeMoon is the one this week that's getting all the attention?
No, I mean, yes, SafeMoon and all these meme coins have lots of interest from newbies. But at the end of the day, at Tokenmetrics, our approach is this. We like to take a fundamental analysis approach to cryptocurrency investing. We're basically value investors. And while meme coins are fun, when the music stops playing, like happened this week, SafeMoon dropped the most yesterday. Out of all the assets out in the crypto space, when the music stopped playing and there crashes, because in crypto, it's a very volatile market. You can wake up and in 12 hours, your portfolio is down 40%. And there's no need to go chasing meme coins when you can find similar type returns in products that will still be around in 5 years. So products like Ethereum, Bitcoin, Binance BNB token, which launched back in 2017, has delivered almost 10,000x returns. So why go chasing meme coins and take on that additional risk when you can find similar projects that will still be around and give you even better returns long term? Now, at Tokenmetrics, we have a very contrarian approach. We think Bitcoin is great technology, but we think Bitcoin's days are almost over. Because Bitcoin was designed to be digital cash, but now it's becoming just purely a store of value. It's becoming digital gold. And the gold market cap is, let's say, 10 to 12 trillion. But if we look at crypto assets as being the next internet, as through DeFi, that's happening on Ethereum. DeFi went from $1 billion to $65 billion in total assets in just 12 months.
All right.
That's just purely on Ethereum. And and all of DeFi is over $100 billion, and that's happening throughout all of crypto. But half of that is happening on Ethereum. Ethereum has almost 10 times more monthly active developers than Bitcoin.